Welcome to the accounting puzzle. Learning accounting is like trying to put together a 1,000-piece puzzle without the benefit of the picture on the front of the box. To rectify this problem, we have created the picture for your accounting. Refer to this picture every time you analyze a business transaction. Before we begin, we'll have a short quiz. Which is better, a debit or a credit? Have your answer? Neither. They are opposites to each other, just like left and right, up and down, in and out, positive and negative. The purpose of the question was to dispel any preconceived notions that a debit is better than a credit or a credit is better than a debit. They are only a way of causing an amount to go up or an amount to go down. If an account has a debit balance, a debit entry will make it go up, and a credit entry will make it go down. If an account has a credit balance, a credit entry will make it go up, and a debit entry will make it go down. Now let's look at the puzzle. We have 4 quadrants. The top left corner we'll use to represent assets. Assets are things you own. For example, cash in the bank, receivables from customers, vehicle, and equipment. Liabilities, this is money you owe. Examples are accounts payable to suppliers, bank loan. Equity is also in the box with the liabilities, and it represents your net worth. An example is owner's capital. So if you take assets minus your liabilities, you will get your equity. Revenue, this is money you have earned, whether or not you've received the cash. Examples might be bookkeeping fees earned or consulting fees earned. Finally, expenses. These are costs you've incurred, whether you paid for them or not. Examples are advertising, bank charges, and vehicle expense. Now let's look at the columns. The left column, these accounts are normally a debit balance. So a debit to any of these accounts will increase the balance, and a credit will decrease the balance. The right column, these accounts are normally credit balance. So a credit will increase the balance, and a debit will decrease the balance. Always total debits equal total credits. If this is true, you are in balance. Now let's look at the first row. A balance sheet is a financial statement that includes assets, liabilities, and equity. The balance in these accounts at a specific point in time, for example, December 31st. The bottom row are income statement accounts. The accumulated change in these accounts over a period of time, for example, for the month of January or for the year. Assets equal liabilities plus equity is called the balance sheet equation. Revenue minus expenses equals net income. This is the income statement equation. This concludes the accounting puzzle.